Well, hello, it's Mike Jack with Minrian Real Estate Promo with another Flip It Friday video. And we're now at the end of May, coming into June. Most of the country is starting to open back up again, albeit slowly, slower than some of us would like in some areas, especially the area that I live in. But we're starting to open back up, and if you've been watching the market data, the market, you'll notice, early in the onset of this pandemic and the coronavirus and the COVID-19, whatever you want to call it, the showings just stopped for real estate. And a lot of people were speculating that, this is going to crash the market. And I expected there to be a decline in the value for a short decline, and then hopefully, an increase back up. Well, we're not even at the end of this, and we're already seeing a spike in closings. Market value has gone up. Like the median sales price here in the Twin Cities, just reported for the month of April, broke 300,000. So we're at $305,000 for our median sales price, and people are still getting multiple offers on good quality properties in that $350,000 price range and below. Higher price ranges are slower. They're not moving quite as fast. But there's still a lot of activity, and people are starting to see a surge in activity. And there's a couple things we need to keep in mind. A couple problems and a couple positives. A couple of the positives, values are going up, and houses are selling quickly, and the finances are starting to loosen up, like the Fannie Mae, Freddie Mac, FHA guidelines. They're lowering their criteria again. They're lowering the credit thresholds, the FICO scores and all that, which is making it easier. But values are going up. Values are going up because there's still a lack of inventory. And one of the reasons why there's still a lack of inventory, a lot of people that took their houses off the market in March, early April, because of the coronavirus scare and the pandemic that happened. So the inventory hasn't been there, and the people that were still looking for properties, they had less or fewer properties at that point even to choose from. As things soften up and people get more comfortable again, and a lot of technology has changed, so there's a lot of online virtual tours and stuff like that. Everyone's got all these no contact things and all kinds of different things to make people feel better about coming out to see the properties, which is working because people are looking at the houses again. And if you look at like showing time, you can see the graph. The number of showings just in this past week surpassed the same time frame as the previous year, and there was no issues last year. Last year was just a normal market, normal in relative times, that we had more showings this last week here than with the coronavirus than 1 year ago for the exact same time frame. So the demand is still there, and there's less inventory available now than there was back in the same time frame, end of May of 2019. So that's a couple of our problems that we're looking at. And I do think you're going to see a lot of people that have been thinking about buying, that think now is the time to buy. Maybe they're concerned about not having a job later on, or the income or whatever, and they decide they want to buy now while they can still qualify for it. So I think you're going to see a surge of buying going on right now. That later this summer or fall, I think that's when we're going to really be able to tell what's going to happen with this market. Because with everyone laid off, how many people is this going to affect them? I know right now, credit scores and all that is not going to be affected. But if they can't make their payments up later on, or if any other financial hiccups are going to happen, which is going to start to come into, we're going to see that later this year. That's when we're going to start to see what's going to happen. So are we going to see inventory hitting the market, and are we going to see the demand keep up? I think we're going to see the demand through the summer, and I think we need another 2 months of watching the market and seeing the trends, so that we can determine what's going to really happen, because there's so many unknowns and so many variables. I mean, the amount of money that they have printed in the last two months, it's astronomical. Like $2 trillion, I think, when I was just looking at it, that the federal debt went up in the last couple months. $2 trillion, $1.5 to $2 trillion, just in a couple months. I mean, it's unbelievable amount of spending. And there's already massive inflation. Like gas prices should be going down because of the extra surplus of gas, but it's going up because of the cost of inflation. So anything that people are consuming, is going to go up. And there's all kinds of different variables and factors to keep an eye on. So right now, I think it's still you still have to be cautious on what you're buying. So I would, if you're going to be buying something for the long hold, make sure that they cash flow. If you can get a really good deal on them, do it. But I would not be anything that's speculative right now, or anything that's got very thin margins. I would be hesitant on buying that myself. So those are the things you need to think about. But I would still move forward. Just do it cautiously right now. And let's give it another month or two. Keep an eye on the data before we determine, or before we have a better feel of what the market's going to do. So with that, see you guys back here next week with some more thoughts on another Flip It Friday.